Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for June 18th, 2017. And I want to welcome you guys and gals to this week's video. Now, next week is going to be kind of a light week for data. Might not even be a bad week to take a little bit of a vacation because there's not a lot on the schedule. However, there are a few important things that are happening next week. One of them being the New Zealand rate decision on Thursday. We also have the Canadian retail sales on Thursday as well. Now, when I say New Zealand rate decision, it's actually Wednesday evening if you're in the U.S. or North America. And it's going to be Thursday morning for those in New Zealand, and then Friday we have Canadian CPI. So, but now before I get into all that, I do want to mention that if you have not tried ForexAnalytix yet, make sure you do so. Just click right here where it says sign up today. Get your first 10 days for $1. Once you do that, download the mobile app. Go to the App Store in Apple, or for those of you with Android devices, click on the Google Play and download the app. So this way you can get all of our notifications and breaches of support and resistance levels, key updates on your mobile application while you're on the go. All right, let's get into some of the charts, and I want to talk about a few specifics. And as it's updating here, let's talk about the dollar. First of all, the dollar has really respected a major key support, and you can see, and actually I have to go over to the daily chart to show you, the 618 retracement held this week. It was important, and if you look closely at this chart, and you as written here in the analysis, you can see if you filter out the CPI data, the noise here, or in other words, filter out the spike here, this might be a little inverted head and shoulder pattern. You see like the shoulder here, head, shoulder. Regardless, there's a lot of support on the dollar index at 96.40 basically. In order for the dollar bulls to stay in control, that has to hold. If that technical level, the 96.40 level, breaks, that is going to be an extremely bearish event for the dollar. Now, the dollar is held up there, and I'll tell you, there's a lot of people that are playing the dollar to the long side here, which makes sense from a risk-reward perspective. The problem with the dollar is it's just not doing so well, and it doesn't look that hot against other currencies. Let's take, for example, the euro dollar. So if you look at the euro dollar, and this is the daily chart, notice that we've had this really bullish run. Okay, French elections, everything looks good, and the pullbacks have been very minor. Now, there's a gap to be filled way down here, and I think a lot of people that are playing the dollar long are looking for that eventually to be filled, and I'm assuming at some point it will. I just don't know if this is the time. We've had this bullish move in the euro. We've only pulled back to the 38% retracement. That's a very shallow retracement. We've worked off some pretty overbought conditions on relative strength. So this could allow, if the euro breaks out here, this could allow for a retest of what we call the channel resistance, which is over here at 114. It's still possible, but the dollar would be under some significant pressure if that happened. But that's potential. I mean, because you go back to the euro and you're like, okay, it looks like it's rolling over, but then again, it's holding up some key supports. All right. I also want to take you over to the cable because, you know, the pound, following the UK elections, the pound has been, notice that the pound has held a breakout point, which is at 126. Okay. That was a pretty key hold. It was a breakout point right here. It was a key hold. And with Theresa May's party losing control of Parliament, we would have expected, and I certainly expected, a much deeper correction in the pound, but it really hasn't corrected that much, which With the change in the MPC this week, and the voters in the MPC this week, that kind of gives the pound a little bit of a bullish outlook, if you will. So I think if you break back above like this 128.50 level or the 50% retracement right here, the pound might actually squeeze some more. So again, this is I'm pointing out, you know, the euro and the pound, which don't necessarily look bearish, which means that the dollar index, I'm questioning, you know, how big of a bounce we're going to be and get. And I also want to take you over to like the dollar Canadian. The dollar Canadian closed below an important weekly trend line. If you take the lows from 2016 right here and then the other lows from 2017, you notice we closed below that trend line. You draw it right through the bottom there, and we close below it. This Canadian has a bearish pennant that actually completes at 31.30. Also, positioning of the Canadian dollar is still ultimately very long Canadian dollars, which means that the dollar Canadian could still see some downside. We are starting to get oversold, so you got to be careful there. Also, one other thing I'm looking at is I'm looking at the peso. I mean, look at the dollar peso. Did I just miss it? There it is. Okay. Look at the dollar peso. This thing can't muster a rally. I know a lot of traders that have been trying to buy it. It's been a really, I actually bought it. I have to, admittedly, I bought it on Friday, and I ended up losing a little bit of money because I was trying to play it off the support here. It's trading heavy. We closed below this horizontal support. And if you actually look at the weekly chart from the lows of 2013 to the all-time highs here at 22 of this year, we have broken a lot of key supports, and it looks like we're going to the 50% retracement near 17. So when I start looking at the Canadian dollar, the peso, I look at the euro, I look at the pound, I don't know if I'm completely sold on dollar strength. Okay, one last thing I want to point out, since this week we do have the RBNZ. Okay, the RBNZ is expected to make their decision on interest rates Wednesday afternoon. So, and that's Thursday morning in New Zealand. Now, if you go over to the weekly chart on the New Zealand, take a look at this chart. That is a symmetrical triangle. Okay, you have your up trend line here that we rejected. Lower highs on the weekly chart. Higher lows on the daily. Now, from a risk reward perspective, it makes sense to be short the Kiwi because your risk is above this trend line. All right. And so early this week, that might be something that you consider. Now, I say that because this last week, the New Zealand GDP was weaker than expected. So everybody's expecting the RBNZ, or was expecting the RBNZ, to come in with pretty much steady as she goes monetary policy, you know, and maybe even some, you know, relatively hawkish comments. How about if those comments come in from Graham Wheeler a little bit more dovish? And knowing Wheeler the dealer from the RBNZ, he doesn't like and doesn't want a strong currency. He may try to talk down the New Zealand dollar on Wednesday night, Thursday morning in New Zealand. So it's something to keep in mind going into this week, since this is one of the premier events of the currency market this week is going to be the RBNZ decision. You got to watch it here because we're at resistance. The RBNZ doesn't want a stronger currency, and the GDP numbers did come in weaker than expected. So with that being said, the New Zealand dollar might have a little bit of an issue up at these levels. But on the flip side, if we do break out and we break out above, that's about let's just call it about 73.50. We break above 73.50, that would be very bullish, the Kiwi dollar, going into next week. All right, ladies and gentlemen, my name is Blake Morrow. You've been listening to the Week Ahead video, and make sure that if you haven't tried out ForexAnalytix, do yourself a favor. It's only $1 US. Try it out for 10 days. See if it's right for you. Thanks for listening in. Have a great trading week this next week.